I think what it's telling us is the cost of innovation is collapsing, which it has been doing. I mean, the cost of AI training is dropping before this, 75% per year. The cost for inference, 85 to 90%. I think it throws the weight more towards inference chips from training chips, and so...
Cathie Wood highlights the rapid decline in AI costs, with training costs falling by 75% annually and inference costs even more. This shift boosts the competitiveness of inference chips over training chips, positioning companies like Palantir to gain market share. She emphasizes AI's transformative potential in autonomous mobility and healthcare, particularly through innovations like CRISPR and sequencing technologies. Wood views this as a key moment for the U.S. tech sector, with global competition spurring innovation. While market volatility raises questions about AI investments like Nvidia, she believes long-term prospects remain strong, with practical AI applications set to flourish. Investors are advised to manage risk as market dynamics evolve, awaiting clarity from upcoming earnings reports from major tech players. Despite short-term uncertainty, AI's impact on productivity and innovation is expected to be profound.
Nvidia is highly exalted, and deservedly so, in the training chip space. Inference is a lot more competitive.
Okay, do we fully understand the implications of that? Because the question that everybody's asking this morning is, do I buy the dip? So if we're seeing the landscape changing, is it too early to make that transition and understand what the implications of it are?
Yes, we've been studying the tech stack and where we think it's going. We're going to put out big ideas in, I think, a week.
Give us some hints.
Yes, so here's a hint. We do think there are share shifts taking place within the tech stack. We think platform as a service, so think Palantir, is going to gain significant share. And this news yesterday, I think, highlights that, or reinforces that. We think infrastructure as a service is going to stabilize the share. Software as a service will come down a share. However, I've said all of that. All of them will be growing rapidly. It's just how rapid.
Yeah. And Palantir, we should say, is one of your holdings, of course, a company you know very well, Cathie. So if inference is going to become cheaper, is this going to be a situation that drives more demand? We were talking about, is that where the positivity comes from? For the companies that don't train but do infer,
yes.
How positive is this going to be?
It's going to be extremely positive. So those using AI, whether for productivity or other applications, are going to benefit. We think the two most profound use cases right now, besides increasing productivity for everyone, autonomous mobility, so think cars, drones, and so forth, and interestingly, the healthcare space. We think the convergence of various sequencing technologies, AI, and CRISPR gene editing, that convergence is going to cure more and more diseases over time.
So these sound like huge positives for the businesses that are involved in that stream. What does it tell us about US tech overall? We had a conversation yesterday about whether this is some kind of end of US exceptionalism, and that might be in terms of stocks broadly, but in terms of the US tech sector, are we talking about that? Or is this just the Sputnik moment that's been mentioned many times, a chance for the US now to catch up again?
Yes, I think competition is great for the US, and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now.
DeepSeek's breakout calling into question the tens of billions of dollars big tech companies have coughed up for AI development. The move lower also raising eyebrows around the valuations of these tech leaders. Joining us now, Deepwater Asset Management, Gene Munster. Gene, I suppose the best way to ask you whether you think this is an opportunity or sort of sign of a greater risk here is to simply ask you, are you picking up more Nvidia at this point?
Deepwater does own Nvidia. I can't say how we're trading it in the near term, but I can say we do own Nvidia. And Deirdre, I think at the fundamental question there is the near term and then there is the long term. And I just want to highlight one dynamic around the near term, is that the innovation around DeepSeek is real. And even if you think that they're embellishing some of the cost piece around that, that innovation piece is real. But there's a much bigger question that needs to be asked, is not about what the cost to train the previous models were, but to get to that incremental step forward closer to artificial general intelligence. Does DeepSeek have some sort of a formula to do that in a cost-effective way? And my sense is that they will not be able to do that. So I think that the spending piece is on track. The reason why I mentioned there's the near term around how these are trading versus kind of, let's say, the near term over the next few days, actually, is that all eyes are centered on tomorrow night with Microsoft, with Meta, Tesla's comments about the hyperscalers. And most investors believe, consensus is that they're going to have some sort of reassuring comments that the market's going to be just, that the AI trade, the hardware trade, the CapEx spending is intact. And when that becomes consensus, if that doesn't yield kind of a rebound in some of these stocks, I think you could see a little bit of a near-term sell-off. If you're curious, typically when you have these shocks in the system, looking back to the run from 95 to 2000, it's about 30 days it takes from that initial shock that we saw yesterday to when things actually bottom, which puts us right in sync with when Nvidia is going to be reporting their quarter.
I mean, you own Nvidia. Steph's got a move that I'm going to get to after this because it plays right into what we're talking about here. But how are you assessing the damage here? Morgan Stanley today cuts the price targets of a number of semi stocks, including Nvidia and Broadcom and Marvell and Micron. Nvidia goes to 152 from 166, whereas Baird today says they'd be buyers of Nvidia on this dip.
So 152, just to use that number on Nvidia, would still be a nice 20% rise from here, which would indicate that you should not sell all your Nvidia. What you should do, though, is evaluate risk. And I watched the show yesterday. Obviously, I'm here today. We are all talking about risk management. And for the last 2 days, I've been talking to a lot of portfolio managers within Cerity Partners, outside of Cerity Partners. There are very few. In fact, I don't think there's anybody who said that now is the time to back up the truck on AI. By the same token, nobody is saying sell all these names outright. That's not the conversation. The idea that these are bust in some sort of post-1999 way is not what people are talking about. Now, maybe that's wrong, but we'll find out. What people are talking about, and by people, I'm referring to professional portfolio managers, is this. Did we go into the end of last week with simply too much risk? Were we too blasé? Consider Oracle for a second, one of the stocks that's in the headlines the last 2 days. It shot up like a moon rocket last week on Project Stargate, and now it's given that all back. You have to be comfortable with the level of risk that you have. Now, what I'm saying to you, just to be explicit, is most people that I'm talking to are talking about trimming risk. What I'm doing in light of that is I'm waiting because we are going to get more information as the week goes on. I don't want to get ahead of where we are in today's rundown, but I will say we've got earnings coming up from two of the major hyperscalers, Microsoft, Meta. Let's see what they have to say. There are going to be questions about DeepSeek on those conference calls. I will wait for that information, but I think this is a time for everybody to say, not should we sell these all outright, but did we have too much risk?
Nvidia is at the highs of the day. You know, as we're sitting here talking, and Josh makes the case that, you know, some of this might be overdone to at least some degree. It's trying to get 5% back of yesterday's huge sell-off.
I got to ask you about Nvidia. Let's wrap it up with that.
Yeah, we gotta. You know, I wish I came on the show at 9 o'clock. The setup for traders, especially the traders watching this, you know, you watch that 200-day moving average. It's the first time it broke below it since December of 2023, maybe October 2023. It's been a while. We finally eclipsed it. Every buy stop in the world was set to 122. As soon as it hit 122, it was off to the races. So your risk reward, it was set up for a nice rebound trade. And long term, I still think it's great. This story out of China with DeepSeek, we shot first. We're asking questions now, and the answers we're getting. Kyle Bass was on your show. He doesn't trust it, and I have more questions than answers. So I think this was a buying opportunity, just like August 5th with the Japan yen carry trade. Remember that? Yep. We sold off a ridiculous amount. We got an opportunity to buy, and if it does fail the 200-day, you get out.
We're going to wrap it there. Jay Woods, thank you.
You have as much confidence today in Nvidia as you did last week in their ability to to beat and then continue to, if not raise their guidance to the degree they had in the past, because most think that that's not possible anyway, but enough to justify the excitement and the move in those shares?
Well, yes, I do. I mean, we've been doing a lot of research on this, and one of the things to understand is that, like, training consumes a lot of computing power, but inference, especially at the edge, i.e., when you use you do something on your iPhone that requires any kind of agent AI, any kind of AI function, that inferencing function could be multiples of compute power needed. The interesting result, DeepSeek is run on NVIDIA chips. It's just run on last generation NVIDIA chips versus, say, upcoming generations or highest end. Blackwell is coming from NVIDIA. We think there'll be plenty of people pursuing both ends of the AI spectrum, right? There'll be some still pursuing the absolute high-end cutting edge. Think about internet search. There was Yahoo. Then there was Google. But in between, there were Ask Jeeves, Alta Vista, Bing has been around. That battle to be the ultimate dominant AI model is going to continue for a while still. And at the same time, with the lower cost, a lot of more pragmatic, practical applications can be possible, particularly through software and hardware.
The falling costs of AI training and inference are reshaping the tech landscape, with companies like Palantir set to gain from increased competition in inference technologies. This shift boosts industries such as autonomous mobility and healthcare, where innovations like CRISPR gene editing are advancing rapidly. While leaders like Nvidia remain key, investors must navigate evolving risks and opportunities in the market. Global competition and declining innovation costs highlight AI's transformative potential, particularly in the U.S. tech sector. As companies prepare updates, balancing enthusiasm with caution is crucial, signaling a pivotal moment for reshaping industries and practical AI applications. How do you see declining AI costs impacting industry innovation? Which sectors do you believe will benefit most from AI advancements?